Welcome back to another episode of the Anatomy of the Trade. Today we're going to discuss Bitcoin, and we're going to discuss calls and trades that I've made during the latest phases of Bitcoin drop and the trading range. So let's look at the hourly chart of Bitcoin, and here there are two types of either calls of trades. So either a short call or a long call. And then a couple of trades that I made, one short trade and one long trade. So let's just go through this. The first one is pretty easy. So we've been in a downtrend, and we have some kind of redistributional formation, which shows a lot of weakness. So the call here was not only a directional call to the downside, this was actually also on the character. And the call was that we're going to lose, we're going to have a minus $10,000 drop in one day, and that was kind of like a circus, call. There was just too much pressure from the selling side, and demand was not responding. It came to, on a higher time frame, to a very important support level. So this is where people would capitulate. So recognizing this, you're expecting a climactic action. Very quick move down, especially in the speculative assets like this. So this was a relatively easy call, but it was just so nice that it materialized like that. And then after that, we are in the trading range. So climactic action, automatic rally, secondary test, phase A, upthrust. After the upthrust, you have a change of behavior bar. And then you see the low or high. So here, a couple of bars were extremely important. So for instance, this bar right here, it comes on slightly increased supply, stops the price from moving further up. This bar right here, last attempt to push up, second point of excitement in a potential redistribution. And then, I thought that the point of entry was actually pretty good, breaking through. So I'm being taken into the trade, but already this shows supply. So you kind of see that the test fails almost right away. And then you just go and kind of like trying to find the areas where it should reverse. The exit is much more terrible than the entry. And the only excuse that I have is just I'm not available right here to see what's going on. So in reality, the stop loss should have been moved like this. And the exit should have been either here or here. So this should have been a trade. So definitely some improvement on the exit should have been done. The next trade is based on the change of behavior in this area. We see how volatility diminishes, how we don't have anymore this type of sharp reactions to the downside. And then we're forming somewhat of the higher highs, higher lows structure. So the idea here was that after the change of behavior, maybe we have a chance to go up from here. So that was a little bit off. And I would say that the reason why it was off is just because this rally has failed. It creates the lower high, which creates an expectation of the retest of the support and maybe even lower to that. Not necessarily lower than this low just because of the change of behavior, but still a reactionary mode. So that was a little bit sickening, to go through that trade. But then we're seeing shortening of the thrust. We're seeing deterioration into the higher low, which is a strength in itself. Some buying and kind of diminished supply character on the last leg to the downside. So as the rally develops here on Saturday night, this is the long call, which was reiterated again at the higher low, then at this rally, at this attempt to upthrust, at an ability to go lower again. And then here is that recovery, and we said right here that a couple of things should happen. Duration of the price staying above this 37.5 level, which is extremely important level right now, is important. So we kind of seen how the price goes up and now stays above it. So this is bullish. And then we said also extension. Extension of what? Extension of the price above the same level. And we see it here as well. So this is a change of character throughout this whole area, and we're just catching it with this call. So these are the four latest, either calls or price actions. And obviously, we are in the trading range, so we have to act and trade as if we're in the trading range, meaning that we need to isolate trades a little bit better. So for instance, I think that on the secondary test, there was a trade here, which is a swing trade. And this is only for short-term traders. I mean, obviously not for long-term holders. So this would be a trade, number one. This break to the downside. This is your trade number two. Trade number three. Trade number four. Trade number five. I would say probably trade number six that fails. Trade number seven that fails as well. Trade number eight should be here. 9. And then we have kind of like a much longer perspective here, but could be multiple entry points. Here, still here, still here. So that probably would be the best strategy going through this trading range. Why? Because volatility is extremely high, especially in the first part of the trading range. So you don't want to necessarily just do very long-term oriented trades. You want to go to a shorter time frame and start, taking chunks with leverage. And that was kind of an idea. That was kind of the idea behind this period, to go through this. But again, it just depends on your availability. If you are there each time, when the trade happens, that's great. But if not, then you're gonna sporadically, take some chunks, and that's what happened. All right, friends, I was talking for too long. So, what do you think about all of these trades and calls?
Well, can we do this as a question and answer period? Because I think there's some great questions that are popping into my mind about this, and I'm sure our audience would probably be thinking of the same things. Well, first of all, going all the way back to your first call, this is a Roman description of a stupid bar, right? This is one of these cells that are either up or down that just goes way standard deviations away from whatever the ATR had been, and I am in awe of how you're able to see these setups. So my first question is, if you could just go through that again, what you were seeing. You say it's well, it's not that simple for me. And I'm sure that some of our audience is thinking the same thing. Well, what is he seeing here that causes him to, to anticipate this great character, monstrous down move all of a sudden? Can you just go back over that again?
So that is more visible, and let me just show you here on the daily chart. So we kind of came to this moment right here. And I thought that, this was the most important bar preceding this. I thought we're going to have some kind of reaction into the lower part of this bar as a test, and then we're going to go down. But what happened instead is that there was an attempt to go up on this bar, and it fails right away. So it shows you that there is so much supply in this area. And it's kind of like, if it's failing this support, if it's not reacting up, then it's going to fail and capitulate quite significantly. Where to? Into this area. So if we capitulate into 30 from 40, that's going to be minus 10,000 day. So a break would ensure that the weak hands capitulate to the downside. And that's exactly what has happened. So from that perspective, I mean, like, I'm just catching the climactic run. could have been 2 days, but considering how volatile Bitcoin is, 1 day was probably a good guess on the duration. So just a lucky break that way, but there is definitely logic behind it.
Sure, great call. Okay, next question. The looking across after this, and one observation very, very quickly, I thought it was great where you were going through how a trader might approach this kind of a situation, this kind of a trading
Yeah.
range. That this initial volatility, this initial selling climax, automatic recovery. Normally, for longer term Wyckoffs, we'd recognize the initial sell-off, we'd recognize the selling climax, and we might take a stab at possibly the automatic recovery as just a quick trade, but we wouldn't be looking at this point in the trading range back around the 19th and 20th as getting involved. So I thought the observation of how you approach this, and taking it a chunk at a time and looking at it more on an intraday basis was a really good lesson for all of us, and how we approach and this trading range is Bitcoin, but trading ranges are trading ranges. They all kind of start off with volatility and then gradually diminish. So it's a good lesson that way. So that's just kind of an observation. That the next observation that I've got is a question is after the secondary test, and where you entered that trade, you see that down spike and then just horizontal line across there, the second secondary test. And looking at that, some people are going to be looking at it and saying, well, that's a spring. They're at the lows, not there. Over here where you've got ST, yeah, just draw that line across.
This one?
No, the second one, all the way across to
This one?
to there. Yeah, that one. So, and that actually did turn out to be a spring. The others didn't work. So it's kind of an interesting, when you're chasing springs and downtrends, as David Weiss was prone to say, they don't usually work until one works. So here's the case where, we're seeing evidence of that observation.
So what's the question, Franz?
Just, not trading springs in downtrends, and yet being aware that most downtrends are going to end with some sort of, spring action or
Well, I
climax
think
action
that
or whatever.
you can trade springs, even even in a downtrend. So, for instance, this second test. So we have 3 tests here. The second test is a spring type test. So we're not saying that this is a spring. We're saying that this is a spring type. So meaning that the price goes down, tries to temporarily commit, unable to do so, and then recovers. So with that idea that you are in the downtrending environment, you will be looking for the counter to the counter trade to that environment, meaning that you're looking for a rally, and your trade profile should be quick hit and run trade. And therefore, let's say your targets are going to be all conservative targets. And at the first signs of the stop in action supply, you're going to get out. So you could potentially have a trade here. So for instance, overcoming this last bar to the downside, and then trying to see how the price goes into this bar right here. And when you see the bar with the supply, you just get out. So, but it's a little bit, I would say like it's a trade for a professional trader.
Very advanced.
Yeah, so that not only recognizes what the opportunity is, but also could execute it so precisely. So therefore, I mean, my preference is not even, teach that. My preference is to teach probably a trade like this, which is still within the context of the downtrend, and this is what I'm doing here, and then do it correctly, exit it at the correct time. So that probably would be a preference. This trade would be a preference as well. Of this secondary test, yeah, that's fine. This would be a preferable trade right here. For more advanced traders, when you see on the lower time frame this recovery, especially like around 30 and how it goes back, this would be a very aggressive trade into the area of the automatic rally. And I've seen some of the people on the Discord, we had people who caught this bottom, but again, you gotta be here or at least have a limit buy order ready, anticipating that there's going to be a recovery.
Mm-hmm.
And
Okay.
by the way, just kind of also thinking about, we have uh, two calls here, and both of them are like almost like long-term calls, even though the first one feels short-term, but the distance traveled, it's kind of like a long-term trade. You could see how there is no need to swing trade here anymore. We're seeing the change of behavior that is suggestive of much more sustainable swing to the upside. Whereas, let's say somewhere here, these trades, you still want to probably have them short in a shorter duration, just because the change of behavior has happened, but it needs to be confirmed by the change of character. And hopefully that's what we've had here in this area.
Mm-hmm. Okay. Another question, I'm always looking for, widespread, high volume bars as kind of a point on the chart to anchor sort of an expectation of what might happen going forward. And that down bar that you circled just while you're talking about this on the 21st, I believe, after the automatic reaction. To me, and correct me if you think I'm wrong, but that looks like probably the most important bar on the chart right now
Mm-hmm.
because
Yeah, we're
it's.
still working on it. Yeah, for sure.
Mhm.
Yeah, and the way how we're approaching it is okay, but it's somewhat tentative. So this is a good breakout. So we need to hold on here and start going into 40s. So between 40 and 42, this is going to be the most important area right here because if we're approaching, let's say 42, there's going to be a rush of orders right here where people would say like this whole correction is done, so I need to be in because it's going to go to 60 and so on and so forth, back to 60. So yes, indeed, this is the most important bar right now.
And the last question that I've got in my feeble little mind here, looking at around the 30th, we get a real decline. We get volume, both supply and demand, just indicating exhaustion. And one of the things that we know is that there almost always there's going to be some kind of rally after an exhaustion of volume like that. So sometimes the rallies can be a technical rally. And I'm wondering, based on the declining level of demand, which you're indicating there, whether, and you mentioned that this is sort of it's not a real aggressive move, whether this might fit the description of a technical rally rather than a.
Yeah, we would have to, characteristically, for sure, we have the part with the exhaustion of selling, and then we have diminishing demand going up. So we just basically rallying on the result itself. It commits every time, it holds, so therefore it's bullish right now. The key, obviously, again, this bar, this level right here, could we overcome it? So I would just trade it on the result alone. If we could have more of the demand coming in and expansion of the result in this area, I would be more inclined to hold on to this call and hold on to this trade if you're in it. And if we are failing around this area, around 40, 42, and that's why it's just so important. Then we probably will be talking about, that the character of this rally produced more of the technical condition than, a sustainable uptrend. And we would have to see how the price is going to behave in this area. So yeah, very, very important area for us to attack here at 40 and 42. All right.
I
Okay.
think that's basically the questions I've got, Roman.
Yeah.
And I think,
Perfect.
I'm not a Bitcoin or a crypto trader myself, but I know you've got a great following, and I believe it's the Discord group that you and
Oh
Alessio have set
yes,
up.
yes, for sure. Yeah. So Alessio and I we're just doing a lot of stuff on the Discord right now. There is a very lively discussion among the members each day about the trades, the calls, analysis. So if you're interested, join us. Go to wyckoffanalytics.com. Find the Wyckoff Crypto Trading Lab and sign up and start discussing it with us in real time. All right. Well, Franz, thank you so much. Good discussion about this period in the Bitcoin. Definitely challenging. So as you could see, there are spots where there are failures. I think that I should. Pay more attention to the environment, the trading range. You have to trade it in a specific way, different than the trading environment, and that's probably the biggest kind of like takeaway from this session. Franz, thank you so much.
Very good lesson. Thank you, Roman.